without further ado, let me jump into our conversation. So we will be talking in this conversation extensively about how to drive more capital into the investment ecosystem in Mexico. But before we do that, I would like to begin with how to deploy the capital that exists, the existing capital. So let me go ahead and start with you, Mario. You have spoken before about the importance of mobilizing existing capital. What do you think are the critical factors that enable an efficient deployment of capital?
Well, as we know, private credit in the world is not scarce, but execution is. So in Mexico, we have a big distribution challenge and opportunity because we have one bank every 100,000 companies, and the private credit is 34.65% of the GDP. If you compare that to the average in Latam, it's more than 10% less. If you compare it to Brazil, Brazil is more than double in Mexico. So we have a distribution problem, and that's, of course, also an opportunity.
Yes. And so let me continue with Emilio. Emilio, what is the role played by manufacturing and supply chains? And where do you see a clear need to deploy existing capital?
Well, and of course I'm biased on it, but I think you hear every single panel, and I think the largest single opportunity for deploying capital in Mexico is in manufacturing. Then that, of course, triggers many other industry services, as Blanca Treviño was saying. But let me just give you a couple of numbers that I think are impressive. If you put together the manufacturing establishments of Mexico, Canada, and the United States, we are about 600,000, okay, manufacturing establishments. China has 6 million manufacturing establishments. So I think the fact that Trump came into office with this shift on supply chains creates the greatest single opportunity for Mexico I think in the history. Because now we are already a sophisticated industrial environment that can capture some of that possibility. So we only need to capture 10% to double the size of the manufacturing establishments of North America. Some of them, they're going to be perfect in the United States. A lot of them are going to have to be in Mexico, precisely for the things that other panels were talking about, and basically our human capital. The average age of factories in Mexico is 27 years old. In the United States, it's 54 years old. We're going to automate part of it, but not everything. So I think let's take 10% of those 6 million manufacturing establishments. Let's deploy capital so they can be North American manufacturing companies, and hopefully some of them Mexican manufacturing companies. So I think that's where the single greatest opportunity in the history for Mexico, for sure, is in manufacturing. And then that creates industrial parks, and that creates other things. But I think we have to deploy capital in the industrial assets in Mexico.
Yes, and so going off of what you were talking about, North America, and focusing more on precisely regional lessons and development, Alejandra, the CAF, a large part of your work centers precisely on interregional integration. So what are the main infrastructure and logistics considerations that enable regional growth that you have seen as coming up in your experience?
Thank you. Well, thank you, Milken Institute, for this panel. It's a great opportunity, and also coming after all the conversations that we've had in the other panels, it's a positive outlook to be looking in 10 years, no? And in that sense, responding, and it's great that I'm after Emilio, I would say we need the manufacturing, but we need the infrastructure to actually be able to transport and export all the manufactured goods. In Mexico, there is 109 kilometers per 100,000 inhabitants, and for example, in Argentina, which is also one of the biggest, there's 189 kilometers by 100,000 inhabitants. Uruguay is like 230. So there's a lot to do still in terms of infrastructure if we're looking in the long term, which I think is very important. And that's something that it's Obviously, it has to go hand in hand with the sexier financial investments, etc. But we still have to think into those big infrastructure projects that are important to continue to link Mexico and the region to the rest of the world, and also in terms of intra-regional opportunities. Mexico is a little different because it's so connected to North America, but if it looks and it turns around, you have Central America and you have the rest of Latin America, which have a huge infrastructure gap and very, very important opportunities of regional integration. So I think in the next 10 years, what I would see would be wonderful to see a greater intra-regional and dependence within the region. Obviously, offering services and interacting with the rest of the world, but I think there's a very untapped opportunity in the region.
So moving on from infrastructure and manufacturing, a little bit into more like innovation. And Roberto, from your perspective, what is the role precisely of investing in manufacturing, infrastructure, logistics, as compared to investing in diverse and innovative projects in order to support national growth?
Well, at the end, and I think we all did our homework and read the study, and you see what's the impact of innovation in the productivity of a country, and the gap that it has created that we haven't tackled that yet. So, but at the end, I think everything ties together, and I mean, I'm pretty sure it has been mentioned in this forum about Plan Mexico and this new policy on reindustrialization of the country, and this is basically building better ecosystems and better productive ecosystems. And at the end, if we're going to do that effort, and from the development side back, that means open a lot of new markets and establish the conditions for these businesses to develop, and also a lot of work in the infrastructure aspect, then it makes sense that we go and try to aim to have the highest innovation in these sectors that we're creating. At the end, this is the bet that I guess Emilio is talking about. If we're aiming to get a least of that share that we had lost in the past, then we ought to do it. We don't have zero cost capital as other countries in the world. So what we need to aim for is innovative financial structures. That's our job. How can we get multiplier effects? That's also our job. We have great guarantees program that allow that. How can we, as a government, as a development banks, how can we do additionality? How can we not fight with the commercial banks, but complement them? And at the end, all these are the elements joined with having the bet on the innovative projects that we're going to be competitive in a new world where this zero capital competition, it's not going to end soon.
Yes,
can I make a comment, Maggie, on that? Just because you allowed us to do this.
Yes, of course.
So I'm following the rules. But again, and I am super biased on manufacturing, but for example, today there is 100 auto companies in China. 100. There is less than 10 in North America, 0 in Mexico, and 0 in Canada. In the same time that we signed our USMCA, the Chinese created 100 companies, auto companies, and that can be repeated into many other sectors. And one of the reasons why they were able to do it, because they also make fantastic cars, right, is because they had the manufacturing facilities. So I think innovation is critical, but we need to have the manufacturing plants also back. I think that's where Donald Trump is absolutely right. It's hard as a Mexican to say it, I agree, but I think he's absolutely right. So if we can deploy capital on bringing the manufacturing facilities back, if we can have the leadership on the capital markets to make the channels on how to deploy that capital, then we are going to do fantastic on innovation. Because when you go to Mexican plants with Mexican workforce, we tend to be extremely productive, in many cases more productive than the United States, and in some cases more productive than China. So I think this is where the opportunity lies.
So clearly we see a need for capital and to deploy it into multiple different sectors. So now let's turn to actually the conversation of how to drive more capital into the private equity ecosystem. One thing that stands out in a recent report that the Milken Institute put out was that in Mexico, the principal investor is still the United States. This distinguishes Mexico from countries such as Brazil, where domestic investment really represents the majority of investment in Brazilian companies. So let's open this up precisely to conversation, and let me start with a question of what is the role that you view as being played by institutional investors, such as the Fondo de Fondos and the Afores, in injecting further national capital into Mexican companies. And Roberto, why don't we start with you?
I mean, at the end of this effort, it's not new. I want to say that this effort of rethinking the Mexican economy comes from the last administration. And one of the main aspects that happened before was the pension reform, which then has created a very good trajectory of savings in the Mexican economy and assets, possibility of assets under management for the pension funds. So all these coupled with another supply side policies that have been development are basically setting the overall basis of what we want to achieve. But also, what I like to highlight from the last months that we have been working in this new administration is the level of dialogue that we have never had with the business sector, with the banks, with authorities, and I think the objective of this is we're going through a shift and we still don't know. I mean, we know what we can do as a country. What's our role? What can be our role in this new economy? We still don't have clarity on what's sort of the play within our closest business partners, specifically the US. But at the end, this is an ongoing dialogue that I have not seen in a lot of time. And if we see, let me give one example, that was the publication of the new request for, or the new fast track for energy permits. Yes. At the end, that's the government taking one step back. We had a change of set of rules in the past. We're now implementing them. But the government is taking a step back saying, in my planning, this is where I need the energy, in this speed and in these times and in these capacities. This is where I want to go. If you compare with that, let's just go and do that. At the end, I think for the aspect of the industrialization and manufacturing, this is the conversation that we need to keep on going, not only among us, but also with the US. What do you need us to do? What are you, if you're looking at risk of having a big pharma dependency on China or a big pharma dependency on India, what can we do here? Where's our competitive advantage? What can you do there, and how can we complement each other? And then bring the business sector there. So it's basically sort of putting a narrative behind capital. And I like to say that what we're trying to do now in the bank with El Plan Mexico is to build better business cases. How can we build better business cases? At the end, all of us have to go through committees and convince people to put the money in XYZ risky project. So what we need to do is build this narrative around it, build that we're creating our market, or at least a market that makes sense, that it has the appropriate incentive for it to foster. And then when we have a clarity on what's the sort of like the planning that we want for the manufacturing going into this country, then we can start deploying it. So, but it's right now it's a really good conversation that is been happening with the private and public sector, but we need a third element, which is the certainty of what's going to be our new role in terms of what should we be focusing on, because also capital is scarce.
Any other thought? Yes, please, Alejandra.
Okay, perfect. No, I would like to compliment Roberto because I think that one of the key things of development banks, and we see it as a regional development bank, but really like the stronghold is the local development banks, is that de-risking and complementarity and help like deepen the capital market. So for example, the Fondo de Fondos of Mexico that started I think in 2012, if I'm not mistaken, that we invested in 2012. I mean, those are the typical initiatives that really you need to be able to change a little bit the context of what you were talking about, no? So if I'm not mistaken, the US is the biggest investor, then come the local ones, but it's like 13%, which is much smaller than in Brazil. And also 80% of the investment is in VC, and particularly in Mexico, it's very small companies, right? So what we need to think in the next 10 years is how do we really make a context where we help those companies grow, we help them mix, and we help that the local financing actually is the one that invests, and we change that asymmetry. In Brazil, they do it because they have a very strong BNDES that sort of like has a very huge budget and has very interesting de-risking mechanisms, and they are also more flexible with the rules of investing for institutional investors. So I do think there's something that we can learn from there. And then as development banks, in addition to helping, for example, fund El Fondo de Fondos, I think having instruments that help invest or that help structure large projects in manufacturing and infrastructure that will de-risk is something I think that we have to do to see how we can, move the whole market forward. So de-risking, lending, trust and transparency, I would say that is very important.
Yes. Emilio?
Yeah, I think that we need a couple of things. We're in the middle of raising a manufacturing fund, $250 million. It's going well, I would say. I have seen, like Roberto said, a shift in the last 6 months on the level of conversations. But I think there's at least 3 things that we need to make this bigger, right? The first one is I absolutely think we need leadership. We need leadership in the financial institutions, in the Afores, to really drive the decisions, and specifically speed, right? I think time is of the essence for these investments. We need to do it, and we need to do it quickly. And that takes me to the second point is we need the right adjustments on regulation so the financial markets, the Afores, and the banks, etc., feel comfortable on deploying capital. Especially, and we had a breakfast with Rich Dizio, the CEO of the Milken Institute in Monterrey, with some of the family offices there. And that takes me to the second thing, which is we need Mexican capital to be deployed in Mexico. I think if we are just waiting for the capital of other parts of the world to be invested in Mexico, without Mexican capital being invested, is a hard sell. Because, and Rich told us that in that group is, why do you want to convince me to invest in Mexico if you are not investing in Mexico? And I think we have the Afores, which I continue to hear during all day. Let's support the Afores and incentivize the Afores to invest the money. But the last thing is we need projects. Yes. And I think that's where us, the entrepreneurs, I'll call myself an old entrepreneur, but we need to come up with projects, and we need a different mindset on Mexican businesses to become more public, to get more pulverized so you can grow. And that, one of the big challenges, of course, is formality. Is how do we have information? It's one challenge. We have a good target that we want to acquire, but we ask for information, and the building for information so we can present it to the different funds takes a lot of effort. And when you are late delivering your financials, as Alvaro Rodriguez says, there's some alchemy going in there to maneuver the financial statements. So we need to work all together. And that's why I think leadership actually is the most important thing.
And so when we think precisely of institutional investment, the other source, and you're talking about working all together and the importance of domestic collaboration, the other big source of investment is, of course, public-private partnerships. So Alejandra, I know in your perspective from the regional development of Latin America, how have you seen those work out? And what do you think are the key factors to keep in mind for Mexico?
That's a very interesting question, and it's totally true. I mean, I think if we're going to, again, from a development side, close the gaps in financing that we have to be able to raise the productivity and the growth expectations that we want as a region, we need to work together and to mobilize the private capital. That's where it's going to be. So I think in terms of public-private partnerships, there's like the bread and butter, which are the infrastructure roads, but I think these types of partnerships can be applied to many other sectors as well. You see them in education, you see them in security, you see them, and that's something that I think needs to be further developed. And that's where roles like Banco or like GAF play a key role. For example, one of the things, guarantees, is one of the instruments that I think have an incredible potential in the coming years, because it's really a very proven way to de-risk opportunities for large projects or maybe for sectors that are not as that people don't know so much about, where you can really like help that, give that additional sort of comfort and then mobilize private capital where it's going to come. So, for example, for the building of the 6th line of the Metro de Sao Paulo, there was a gap in the financing, And what we did as CAF is we did a guarantee, which wasn't that big, it was 40 million in local reais, and this guarantee was able to extend the financing to 20 years. The market wasn't ready or didn't have enough risk appetite to be able to extend it so long, and with this guarantee we were able to close the financing gap and actually finance the metro. So I think that it's one of those types of deals where we really need to think what is that specific role that development banks can do to bring in private capital and for the public sector to have a more effective role.
Robert, oh, sorry, Mario, go ahead.
Yeah, I believe if you have the stability from the development banks and also the speed from the private sector, one key part of this is because the opportunity is already here. Mexico is the first commercial partner with the US, and North America is the largest economy if you add it up. So you need technology to further develop and deploy the capital, right? So for development banks and big investors, nowadays they need visibility and traceability of their investments in real time. So there's a new generation of financial institutions being created that need to participate and further enhance visibility of each investment. And I believe that enhances trust, and that will allow capital to deploy faster, and also allow the markets to really participate at a larger scale.
So speaking precisely of innovation, it wouldn't be a conversation in 2025 if we didn't talk about artificial intelligence. So let me ask you all, what is the role played by emerging technologies, such as precisely fintech and artificial intelligence, in driving real economic activity in countries such as Mexico? And Mario, let me stay with you for a moment.
Well, AI is all over right now, right? So there's large amounts of data available that aren't being used to really underwrite credit. So if you take, I mean, the opportunity is here, and we have an once-in-a-generation opportunity to really redesign the financial ecosystem in North America. Mm-hmm. And the way AI is playing a role is, as I was saying, in the underwriting of this, in the new credits, and also the way to really operate, and also get a real traceability to take them into the markets, because we have the largest companies invested in Mexico, and so the risk isn't very, very high. You just need the way to really get the data and take it to the market in the right way, to put it in the right hands.
And so artificial intelligence is one of the emerging technologies that is definitely driving a lot of the conversation right now. Another big side of emerging technologies that we see as very prevalent in Mexico is fintech. And actually investment in fintech right now represents something like 25% of private capital investment in Mexico. So how do you all view, and maybe Alejandra, let me start with you, because you bring in the regional perspective, and comparing Mexico with Brazil, how the importance of fintech has really played a role in enabling businesses and sustainable growth.
Thank you, Maggie. Well, we were just talking right before getting here how I was very surprised and very optimistic about the Milken report, because we always, and especially from the development side, we're like, Latin America, you know, had a lost decade, and our productivity is negative, and we're always trying to, like, we missed the next opportunity. And actually, what the report shows is that, no, we are quite a dynamic region, and especially Mexico and Brazil in terms of private capital investment, that external from outside the region come in because they see that we're very prepared in terms of STEM, that especially Mexico is very interconnected with other international markets. So I think it's a very positive thing. And then you turn around and you see these like extreme things like financial inclusion. You know, Mexico is one of the lowest in the region in terms of financial inclusion. If I'm not mistaken, it's like, I have to look at the dates, but it's like 45% versus 70% in terms of the average. So that's where you see a huge opportunity in terms of fintech and in terms of AI in general, to be able to close those gaps of productivity so that we can leapfrog into, you know, a sort of a more efficient market and a more efficient ecosystem in general. So the previous panel, which was very interesting, you could see like, you know, maybe it's not the traditional banking system, but now that you have these fintechs and this opportunity, you really have a lot of access into people who never before had a formal access into the financial system. And I see that extending, or IA helping that extend into many other sectors as well, which I think is extremely positive for the region because of our preparation, because of our innovation, because we're a young, relatively young region. I think that there's many opportunities there.
Yes, and actually that is one thing that stands out about Mexico and Brazil, right? The proportion of growth of the graduates from the STEM sector has been growing a lot over the past years. Not only is it catching up with many of the developed countries, more developed countries, but it's actually increasing at a tremendous rate. So again, open to everybody, and let me start with Emilio. How do you view the importance of the human capital that we have in Mexico?
Okay, so the human capital, because my answer to fintech was, I have absolutely no idea, because it's not my field. So on human capital, if you look at the Future of Jobs report from the World Economic Forum, the core skills that companies are looking for are still very human, right? Resiliency, agility, execution, critical thinking, analytical thinking. I think that's great news. But the fastest growing skill is AI and technological literacy, right? So I think that's where the challenge is. I am not so concerned from that. We've been helping companies to find people. We've recruited over 350,000 people over 40 years for manufacturing companies. And I think companies have become really good at training. I think the challenge is the educational system is very slow compared to the change of pace of the skills that are required. So I think it's one of the areas where companies are going to have to be really good at it. But one of the most surprising things for me on this conversation today and on the rest of the panels is this Brazil-Mexico comparison. Because in the world that I live in, Mexico is a much better place to manufacture than Brazil. And Mexico is a much easier place to do business than Brazil. And I think we need to be a little bit more Brazilian on how we sell Mexico. Now, I do believe that Brazilians are investing a lot of money in Brazil. So I think that's where it has to change. But sometimes I think Mexicans, we just, the national sport of complaining of what's going on tariffs and all that. I'm not saying I agree with everything. I don't agree with many things. But I think we need to get our act together and have success stories. And I think if we do that, more public companies here with Maria, better exits for funds and things like that, I think then we can create this Brazilian synergy where everybody believes that this is the best place in Latin America, although I don't believe we are actually Latin America. I think we are not North America. I think the US is more similar to us than Brazil, for sure. And I think this is where the opportunity is.
Roberto, go ahead.
I would like to make a couple of comments. In the innovation side, I think it's very sexy to say that, yeah, we should ride that wave and we'll get Mexico to the next age. We need to do some hard thinking and reprofiling of what we're doing. It's not as simple as that. I don't think we want engineers doing the next CRM in Mexico. I don't think that's the way to go. What you want is what everybody has been saying, for that to permeate on the education and actual people from actual communities finding how to apply that knowledge into actual real problems that tackle the community. Because at the end, we don't know where these new innovations are going to get us yet, but we know there's the potential to impact every kind of sector. So the president has announced a plan. I don't know the plan by hand, but I know it has an education element. I know it has low-hanging fruits like reprofiling, dropouts from STEM careers, to try to do certifications and get in that sort of in that sector super fast. There's a regulation aspect of it that we have to change. There's of course the digital government. We need to basically act by example, and there's an innovation incubation aspect that she has asked us to develop, and that will be basically finding those projects that we can put up some capital to basically try to incubate new entrepreneurship. But we're not there yet. I think we do need to have a hard thinking on how that applies to our sectors, rather than trying to just steal some sort of business line that maybe doesn't make sense that we can do it here. In the side of the fintechs, we're having that conversation. Fintechs and all non-banking intermediaries, they're our biggest bet, but our bigger risk as well. With every bad case as Kame and all these non-intermediaries that get into trouble, we have 2 steps back. And NAFIN at the end is one of the most active second floor lenders. So what we need the fintech to evolve is basically corporate governance. We really would like to see better and stronger and more serious, not saying that they're not, but really good institutions that we can trust, that even though they're innovating in the risk assessments, that they're doing properly. At the end, I don't know if there are bankers here, but sorry, they were efficient enough to hold them back, and a lot of banks have been taking these innovations by themselves. So when you're comparing a bank that has a parametric risk model that is as good as a fintech one, with all the corporate governance and the capital structure, then it's very hard to lean that way. So they have a lot of work to do, maybe not in the innovation aspect right now, but in the corporate governance and capital structure of their institution.
And so speaking of precisely the role played by government and innovation, one of the main objectives of Plan Mexico is to strengthen scientific development and technological innovation. And Roberto, let me stay with you for just a second. What is the role played by precisely Banco Mex and other national development banks in the execution of Plan Mexico?
Yeah, I mean, at the end, the first thing would be all these development of what we like to say productive ecosystems. They're going to rely mostly on tier 2, 3, and 4 companies, which is SMEs, which also are the ones that give the most jobs in Mexico. There's been a lack of attention to that sector, and it's partially a issue of both the development and the commercial banks. Also, we were discussing that we like to call these big enterprises, the anchor enterprises that come and start building huge plants in Mexico. But if at the end they're only cost centers, they're not doing their procurement here, they don't have the corporate offices here, they're applying different standards for their procurement that does not fit into what Mexico is doing, and they're not doing long-term contracts. It's really hard to actually get them to leverage the productive change. So, but the role is there. The role would be to tackle those if we can find these elements and keep this dialogue with the private sector and find these companies and get them to establish the right way so that they can foster additional productive change. Then our bet is to basically lend money or potentiate money through guarantees. Our bet is that we're doing one of the biggest programs that has ever done NAFIN and Banco Mex, trying to potentiate 120 mil millones de pesos. That's a lot of money that we're willing to lose, but at the end, it's going to need that the productive change, everyone is aligned that we want to develop those, that the financial intermediaries are there to do it properly, to do the risk assessments like they should, and then we'll be there supporting with our capital. And the other aspect will be entities like Fondo de Fondos or different Capital Fondo Emprendedor, entities that we can apply some risk capital, try to lever that with the private sector to foster these innovation projects.
Yes, so speaking of private sector, and let me turn it to Emilio and Mario, from the industry perspective, what do you view as the key factors determining the successful implementation of Plan Mexico? Mario?
Well, of course, as I was saying, you need the stability from the development banks and also the speed from the private sector. At Equity Link, we have over 200 manufacturing plants leveraging our tech to give access to thousands and thousands of small and medium-sized companies to capital. So the supply chain needs working capital because these gigantic companies that come to Mexico and invest, because we already have the largest companies in the world invested in Mexico. So for the local suppliers to really get a chance to service a contract of Ford or Honeywell or any of these super big companies, they'll need the working capital to do so. So I believe we all need to work together to pull it off, because this is already a $220 billion market that Mexico exports to the US, and less than 20% of that is being financed. So if we manage to really add, I don't know, 5 or 10% of that amount and keep it in Mexico with companies like the one that Emilio is forming right now, and giving the chance to local players to evolve and grow, I think Mexico will be transformed. We have a huge opportunity right now to take that leap. And the only way forward is to do it together.
Emilio?
I think, I mean, I like Plan Mexico. I think it has the ingredients of, let me say, a good industrial policy, because it includes infrastructure, it includes talent, it includes the objectives of regionalization of supply chains. Okay, so I like that. I think we need leadership like the one that Roberto is showing. So we have the vertical of capital for Plan Mexico. Plan Mexico without a capital vertical is never going to happen. And I think we need to drill down on the capital vertical of Plan Mexico. So I think that's one of the most important things. And we also need to do, have success stories as soon as possible. If we can show capital deployed in new Mexican manufacturing companies, because that is different. And I think, Roberto, you said it right. We need decisions being made in Mexico, new manufacturing companies in Mexico. If you go to Monterrey, the wealth of Monterrey came from machines and from steel and from other industries, right? But I think we need to fall in love with that part of the manufacturing of Mexico again, deploy capital, and have success stories that can generate this China effect or this Brazilian effect in Mexico and bring more people. So it's all about execution. And that's why I think timing is so important. And all of us rallying around Plan Mexico and supporting our president, because we want her to be successful with that. So, but timing is important. If we let Plan Mexico to be old and just a PowerPoint presentation, then I think we're going to miss the opportunity. And I think that's where the challenge is.
And so, Alejandra, any lessons that the Mexican government could learn from other development plans in the region or anything?
Well, I think it's very interesting what Emilio was saying about the Brazil factor, or I think I agree with you. I don't think that it's that Brazil is better than Mexico or that we sell each other more or before, but I do think that there's a very strong component or opportunity of having a regional market. So CAF is owned by 25 Latin American countries. We don't have any donor countries. And when all this turmoil has been happening outside, we were like, thank goodness, we're a cooperative of Latin Americans, which has its, might be a little bit more informal, but we are quick and we know each other's problems and we can learn from each other. And I think that's something I would argue, of course, I'm not Mexican, but I think that you are much closer to the rest of the regions, at least the Spanish-speaking region, than to North America. You have, the same as that, you can look up to North America. You have a whole Central America with interesting markets in Guatemala, in El Salvador, Dominica, that are doing Costa Rica, that are doing interesting things that look up to Mexico. I think if we have better integration, better opportunities to have, for example, joint capital markets. There's an effort called NUAM to join the different, how do you call it now? I promised I was going to speak Spanish, so I'm not going to, but los mercados de capitales that are going to be together, or regional energy markets. I do think there's an opportunity in looking south for Mexico that we can really capitalize on all the shared bonds, cultures, and opportunities that we have. So don't be closer to North America, be close to the rest of the region.
So we have 4 minutes left. So let me finish this with a lightning round of 1 minute for each one of the speakers about your key takeaways. If you want the room to take away something from this conversation, what will it be? And Mario, let me put you on the spot.
Very happy to share my remarks. I'm a true believer that we have this huge opportunity once in a generation to make this leap. And we have to act, and we have to act right now because the world has shifted. It's a multipolar world, and of course, we have a lot to learn from the LATAM regions because they internalize a bunch of stuff that we don't because we are very near to the United States. So that's a huge opportunity, but we also are more dependent on their capital. I think we have to bet as Mexicans more on Mexico and realize that we are a very strong player, and the higher value added that we aim for in our companies through financing will transform the country and the economy. So I believe the way to do that is through innovation and through technology in financing. It's not about who manufactures faster, it's who finances smarter.
Yes. Alejandra, key takeaways?
But I think definitely manufacturing is a very big opportunity. I do think that there is a great opportunity in that if we sit in, 2 years or 5 years, this same panel, and we look at the next version of the Milken report, then we can see that not only have we been growing in terms of the size of the capital markets and the opportunities, but also in that shift that it's not foreign capital, but it's local capital in Mexico. I think there's a huge opportunity there, and that's where we really have to grow to have the policies and have the mechanisms to make much more attractive and flexible the investing within the region. So I would take that as a takeaway. And the data that I hadn't shown you was that 46% of adults in Mexico have an account versus 76% in the rest of the region. So, I think that's something that can really switch with fintechs, with AI, with the opportunity. But you would see in 3 or 5 years, that number to have changed. And if we ride this wave right.
Yeah. Emilio?
Yeah, I think that first we have to realize that in the last 5 years, we became the #1 market and the #1 trading partner for the United States. In this unperfect environment that we Mexicans like to talk about so much every single day, we became the #1 market and #1 trading partner for the largest economy of the world. Imagine what we can do if we implement some of the ideas that we have here. So that's why I think it's all about execution. So I think what the Milken Institute does on bringing us together and bringing the people that are not part of the capital markets like ourselves to understand what we can do, I think breaking the paradigm of the access to capital is the most important thing to happen in Mexico. A lot of the people that I know still have that paradigm. It took me to go, going to the Milken Institute Global Conference to start thinking maybe capital is not the paradigm that we have for growth in our company. And it's been a very interesting ride. And the last thing I would say, of course, in support of manufacturing, 100% of the people that work in manufacturing for export in Mexico have a bank account and are formal jobs. Yeah. So that's why I also believe that that's the path to go. 120 million people in China work in manufacturing. In North America, just 20 million people.
Yeah.
We can be 40 million people, no problem, if we get the capital deployed in North America.
Well, first of all, I would say that whatever you guys are doing in the private side to prospect investments and see if they're feasible, please continue to do so. But at the end, there's going to be this channel or this opportunity, this set of sectors that we want to purposefully move forward. At this point in time, probably two people, the president and the minister, are the only ones who know where's the dialogue going, what are going to be these sectors that we need to foster. But at some point, if we keep the dialogue, that we can signal where the money needs to go to fulfill this plan. Then find the best bets. How can we? Where should we putting our money? From the private sector to be open-minded, and the energy sector is a good example. Maybe you had a prospected investment somewhere that made all the sense, but maybe here for us makes a little bit more sense because ties to a bigger narrative. Just be open-minded, analyze it, see if that's feasible, and be creative as well, and add the innovation aspect of it. We cannot expect government to add the innovation aspect to any productive sector, but we can help, but at the end it's the private sector responsibility. And then bet national. Find Mexican people, find Mexican technology as much as you can, find Mexican procurement. What we can do as a government is to foster and do whatever we can, that if you make a venture in certain sector that we're purposefully pushing forward, that we can set up the elements so that it's sustainable. So it's going to have an ecosystem so that it can grow. So at the end, this is the bet that we are inviting you to do with us.
Yeah.
Well, thank you so much. Thank you to all the speakers for this great conversation. And thank you to you all for listening to us.
Very good.
Thank you.